Good morning, Michael. How are you? Welcome to TradeSpoon and Yellowtown. Today we're going to have a live trading room open to trade stock and options. Welcome GoToWebinar users. Welcome Discord users. Michael Faust, chat. How are you? All right. MSB new on Discord. Can you guys hear me? Do me a favor. Type in inside of the stream chat. If you can just type in inside of stream chat, just say yes if you can hear me or not. That would be great. And if you can see my screen. Green Hornet, welcome. Can you guys see my screen? Can you hear me on the Discord, stream chat? Or where else can you chat? Chat room? Michael T. Wi-Fi. Okay, a few people. All right, let's start. All right, Kingmaker, Yellow Tunnel. All right. So it looks like you guys can hear me and see my screen. Perfect. All right, so let's start. Welcome to Yellow Tunnel and TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of both companies, TradeSpoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. Welcome, Discord users. If this is your first live event, do me a favor, just type in hello inside of the stream chat. GoToWebinar users, welcome. Raymond, Michael, Dennis, Bob, Lalit. My brief bio, for those of you who are new, I know there are a few people that are new. I was Executive Vice President, Head of Technology at Options Express from 1999 through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm very proud of that experience. Since I left Options Express, I work as a consultant investor in several financial technology firms here in Chicago. I've been trading my own money for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level. For general education information purposes only, please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between TradeSpoon and trading block on the bottom of your screen. All right, before market opens, again, very important to go over the trading plan. I encourage everybody to have a pre-market routine where you actually write down what you will do during market session and what you will not do during market session. Always referencing back to your trading plan. I encourage you to have your trading plan in writing. Some of the key points in my trading plan and in my morning routine is 30% cash, right? On average, I think you should have 30% cash in the account. Now, I think VIX has been staying above 20 for the past 6 months. It will probably stay above 20 for the next 6 months. So that will warrant higher cash allocation. So maybe 50% of your portfolio should be in cash on average. And this is something we can control when we face with uncertainty, right? Market can rally 10% in the next few weeks. It can, drop 10% in the next few weeks. So you need to be prepared for both outcomes. Second one is portfolio drawdown, right? Before market opens, in my morning routine, I actually write down in my journal how many positions can I have. So the portfolio drawdown, basically it's how many positions do you have and what is your maximum loss of account value per position, right? So I would suggest 4 positions on average and 2.5% of account value. A lot of people ask me, should I buy Microsoft? Should I buy Amazon? Should I buy Tesla? Should I buy Walmart? The answer is all of them are trading in very high correlation to each other. This is a trader's market. I still don't think this is an investor market. It's too early to get aggressive in your long-term positions. I think market longer term will continue to go lower, right? Posting lower highs and lower lows. So long-term investing is probably too early to initiate. So you have to be a tactical short-term trader. You can think in hours, you can think in minutes, or you can have position, weeks, maybe in months. But long-term buy and hold will probably not hold. You could probably get a entry point, a much better entry point. So you have to be tactical. So for that reason, whether you buy in Walmart or Amazon, they'll probably behave very similar to each other. It probably doesn't make sense to have Walmart and Amazon and also have Tesla, Google and Apple, right? They trade to each other. All it means is that you're not going to be you're going to have too much concentration in equities. And your drawdown could be more than 10%. So for that reason, I propose if you want to trade Amazon or Rivian or Bitcoin, great. This should be one out of your 4 positions, and the maximum loss is 2.5% of account value. How do you determine 2.5% of account value? That is the most difficult decision, right? So we're heading. So example would be today, right? We are heading into Powell's testimony, right? I think it's twice a year in front of the Congress. So market is volatile in front of that, right? We can look at the spiders. We had a strong rebound yesterday at 375. Going into the Powell speech, we basically give up all of the gains from yesterday, right? We are trading right at that Friday's high, or most of the gains from yesterday. We're trading at the Friday's high. So if you, right now, the important low is 362 on spiders. So let's say you think you're bullish on Powell's speech, right? You think, there's all the negative news in terms of the interest rates already factored in. You're actually looking at the 10-year yield. It's breaking down, right? It's trading below 3.2%. We talked about this in the past. This is the key support level. So yields are coming down. The narrative is changing. People are not so concerned about inflation. They're now more concerned with stagflation and recession. So then you're basically saying, what? I think this is a good opportunity. I'm going to go long, right? You clearly have a new low, which is 362, right? 362 is your low. So if you enter in at 372, you have $8 down risk, right? So let's say you want to go long at 370, right? This is the Friday's high. You think this level will hold. It's about 50% retracement, right? So if you buy at 370, right, your stop loss is clearly somewhere in 362. Maybe it can overshoot to 360. So you basically say, what? This is my stop level, 369. Sorry, 360. So this is my buy. This is my stop level. What is my risk? My risk is $10 to the downside. So in a journal, in the pre-market routine, before market opens, right, we're at 823. We're at 823 before market opens. You're already writing down that number. You're saying, I'm buying spiders at 370. My stop loss is $10. Now the size. How do you determine the position size? Average account, a trade spoon and yellow tunnel is $10,000, right? 2.5%. If you multiply this by 2.5%, is $250. So you can risk $250 on this trade, right? So if you're buying, right now you can buy up to 10 shares, right? 10 shares, $10 is your risk, right? This is your risk. Is $10. I don't know if you can see it, but let's write it down here. Your risk is $10. You can probably buy 25 shares, right? 25 shares. I do encourage you to use dollar cost average, right? Powell is going to give a speech. Market can, and he's going to start in the next 5 minutes. So market can go higher to 380 very quickly. It can drop to 360 very quickly. So you don't know exactly how the market will react, right? So for that reason, I propose to split 25 maybe into two parts, maybe 15 and 10, or 12 and 12, or 5, 5 and 5. However you want to split 20, this 25 shares. So you can buy right now before Paul gives a speech, right? You can buy 15 shares if you're very confident that it will yield positive results, or you can just wait and see. And then in case he does say something hawkish, more hawkish that he said, last week or last 2 weeks, then you can buy another 10 shares when it does reach 360. That will give you more space. If it reaches 360, 359, you're still not down 2.5%. But I encourage you to have this rule written down, right? We talked about Ulysses contract. It's important not to just have mental stop, right? Mental stop is easy when you get into a position. When you get out of the position, you kind of forget what was the mental stop, or you kind of, you hear the voice of sirens, right? Going back to Ulysses contract, right? The sirens are talking. They're telling you that market will rebound. If not today, then tomorrow, and if not tomorrow, then next week. And then you hold it, and all of a sudden, this trade became an investment, right? And that's a common mistake. We all do these mistakes, right? We listen to sirens, and we break our own contract, and it becomes an investment. I mean, it's great if we're close to the bottom of the market, but nobody knows where the bottom is, right? We still haven't had the signs of capitulation, of higher VIX, and that's pretty cool. So this is something that, this routine is extremely important. This is something I encourage you to do on a daily basis, and also write this down. Any questions on Discord or on GoToWebinar? All right, what else is important? This is the most important, right? Cash, number of position, account value, everything else fall in place, right? This is what allows you to kind of sleep at night, not worry about your position, not being glued to your account value where you check it every 5 minutes. Important to wait 2 to 3 days to confirm the trend change, right? We had a strong rally yesterday, right? One day usually doesn't set the trend, right? Just because we had a very strong rally, you need confirmation, right? You need to have at least 1 or 2 days. And we said that the previous breakout was 380, right? 379, 380. This is a major support level that goes back to more than a year. So for the bull, at least for the trend to change short term, we need to trade above 380 level. We had a strong rally today. We fall back, probably due to everyone being nervous of what Jerome Powell says. If he says something hawkish, more hawkish, market will probably at least retest this level, maybe marginal low. Or if he says kind of the same thing he said last week, then rally might continue on. So it's important to wait. This is a good rule. If you want to see if the 280 level will hold, you wait 2 to 3 days. If you want to see if the if you want to see if the 380 level will hold, we need to trade at least a couple of days above this level. If you want to see if the 362 level will hold, you have to wait at least 2 to 3 days to see if market is going to trade below that. So patience is important. Waiting these 2 to 3 days, I think it's a very good rule to help you kind of determine where the main support and resistance levels are, and where the possible change in trend might occur. Being long and short the market at the same time, right? A lot of my positions are spread positions. If I'm trading stock, it's a pair trading, right? You can be long and short spiders at the same time. You can buy spiders and you can buy SH. You can express your opinion, right? You can express your opinion or bias in different way by different ratio of these positions. But this is how, out of the 4 positions, I encourage you, if you think market is oversold and it can continue going higher, at least short term, maybe you have 3 long positions, 1 short position. If you think we're far from the bottom and we're just gonna continue going lower, then maybe you have 3 short positions and 1 long. Allow more time, right? If you think market is going to break down tomorrow or next week, then don't buy, July or August positions, go into September. Allow more space, right? We've seen this over and over this year. Every time you look at the low, you think, 419 is the low. The next time it trades at 407. Next time you think 407 is the low, or 410 is the low, it trades at 380. Next time you think 380 is the low, it trades at 360. It is followed by these rallies, 10% rallies, almost, not every time, but more often than not. Then that's the reason to give more space. How do you give more space? You just decrease your position size, right? And that's what helps you. Ultimately, everybody is asking, where is the bottom? My best answer, nobody knows where the bottom is, right? You can talk about a bottom, right? That maybe short-term recent lows is a bottom. I would agree with that. But where's the bottom? You need to have signs of capitulation. Some of the signs of capitulations are VIX, right? So it's important to look at the VIX. VIX has not reached any extreme levels, right? VIX has not reached any extreme level, not even close to the March. So general consensus is it has to jump above 40, 50, 60, depending on the news. But at some point, once VIX is at 50 or 60, the question was, well, what's the significance of that? The significance of that is that we can start having a conversation how close we are to the bottom. Until this happens, I think it's just a pattern of higher lows, lower highs and lower lows, right? As long as that's the pattern. We also have a new kind of a shift in paradigm. Right, little Discord guys, please let me know if you guys have any questions. You guys are always quiet on Discord. We do have a stream chat. Find the buttons or icon stream chat and you can just type in, say hello. Don't be shy, especially if you have questions about trading. Go to webinar. Same thing. Good morning, Lolita. Desi. Welcome. Bottom is 360. Okay. Number of share. Thank you, John. Thank you, Desi. 8 long, 6 short, both long and short. All right. Thank you, John. Good morning, Fred. Thank you. All right. So VIX hasn't capitulated, and the new shift, and everybody is going to cover this on the news, is this new development, right? The yield, right? This year in 2021 is marked by fear of inflation, and Treasury market anticipates that at some point the Fed rate will be around 3.5% or even 3.8%. So the yield is already at, was as high as 3.5%. And because of that, the theme was in high inflation, which sector gets sold off the most is high beta stocks. High beta stocks that have negative cash flow. So if you're a high beta stock or you have negative cash flow, both gets affected, but maybe negative cash flow is the most. The market sells, these stocks sold off because you can't really know what the multiple should be, right? Is it 100? Is it 20? Is it 5? Doesn't really matter. It's negative cash flow, right? So markets sold off as a result of high yield. In the past few weeks, right, we 3.5, and now we're trading above 3.2. So this is a new development where the theme is changing, right? People are not so afraid of hyperinflation. They actually think that inflation is going to be contained and probably subside towards the end of the year. But because Fed is consistently raising interest rates and we still don't have any visibility when the inflation is going to subside, now we have normal correlation, right? Where every time market rallies, Treasury goes up, and every time market sells off, Treasuries go down, right? So we have a steep sell-off in the Treasuries, right? This important breakout, 3.2 was the high in May, and now we are trading below that level, right? We are trading below 3.2 level. This is significant that I think the top in yield has been set, 3.5. I think in 401k, maybe it's time to start allocating more funds to bonds, right? High corporate bonds or treasuries, right? Safety, not high yield, not, riskier bond, but, 5-year treasuries, 10-year treasuries, maybe some AAA bonds is somewhere where you can start allocating your portfolio to, because this is the top. Doesn't mean it's not going to get to 3.5, 3.6. It might, right? We'll see what the Powell will say, but at least you can see that the path of least resistance for the yield is probably going into end of the year is lower yield, right? Probably will get to 2.7 in the next few months. So that's the new narrative. So normal correlation, right? If you were, before, up until last week, if you were 50% in bonds and 50% in equity, even value stocks, you still get, you both got sold off, right? If you were in oil, right, or hiding in energy names where most people were hiding, you still got, your portfolio is still down, right? So the only place to hide, maybe now, starting now, is probably people going to start hiding more and more in treasuries, and that will be the correlation. Market is up, yield is down. Market is down, yield is up, right? So you'll see that correlation. Any questions so far? Michael, welcome, Michael. Welcome, Michael. Can you see? You need to click on live stream button to connect live stream. All right, let me know if you guys are able to do this. Yeah. All right. All right. So meanwhile, let's see. Treasuries are continuing to. Let's look at 1 hour chart. Powell. So Jerome Powell speaks. I paused my TV stream because it's a long testimony. So as he's going to talk, we're going to have this price fluctuation, right? Yield is down, market is up, yield is up. I assume we're having some kind of a rebound in QQQ, right? We do have a rebound in QQQ. So that will be the correlation. For technology is outperforming the rest of the market. You can see we closed yesterday above the critical May low, right? Both on S&P and QQQ. S&P closed right below that. Technology closed right above that. Again, it's important for today, after Powell's speech, for QQQ to close above the 280 level, right? Above the 280 level. If it stays above 280 level, or even if it posts new highs, then I think there's more room for technology to continue to rally. If we're going to close below 280 level, then there is always a risk of another retest of the lows and potentially making, again, new marginal low. So all eyes on Powell's speech and yield, right? We're probably going to have a volatile session today. Dollar is pulling back, right? We had a sharp pullback in the dollar after Powell's speech on June 16, right? The Fed speech, or somewhere, I forgot which day it was. But anyway, this is Powell's speech. Fed rate, dollar dropped significantly, then it rallied after the speech. And now it's stabilizing and it's going lower, right? And that should benefit value stocks, should benefit the value stocks. High yield, again, close to probably 50% retracement, 75, and what is it, 73. We're trading at 74, at 50% retracement. Also very important barometer of how much risk appetite is out there. So we're at 50% retracement, again, key level. VIX, very complacent, still at 30. Nobody's, nobody's nervous. A very low level of put buying, relatively low, right? Historically, it's high. Spiders are down 1%, Russell 2000 down 1%, technology is down 70 basis points. Again, looks like technology is outperforming. Let's see what else. Gold is slightly lower, higher, gold miners slightly lower, silver slightly lower. And energy, right? So energy making new lows, breaking down. That's significant, right? This is one of the most significant events since last week. Kind of the last man standing, right? The last place where everybody was hiding is energy, right? A lot of people have too much concentration in energy. Short term, it's oversold. So I think this level probably will hold or will get close to this level. But will we make new highs? Probably not. So I would propose that, I know a lot of people are highly concentrated in energy. I would just do simple, Fibonacci retracement, look at the lows, right? This is 52-week low going to, well, not 52-week low, sorry. Going back to the pre-war, right, low. So this is a Russia-Ukraine conflict, right, the war. End of February, and that has been very strong support. I would say probably 50% retracement, right? What just happened? Right, probably 50% retracement, something like this. Get back to 50% retracement, maybe a little bit, maybe 62% retracement, and then another pullback, right? I know it's been on the news almost every time I turn on CNBC and Bloomberg. Everybody's saying, buy value stocks, buy, energy. It is great if that can orchestrate soft landing and we don't have, a prolonged bear market, recession, and I, my opinion that Fed will not be able to orchestrate soft landing. The only way to deal with higher energy prices, higher rents, and higher, house prices is to decrease the demand. Unfortunately, I'm not sure if there's any other way. So that means, whatever the word you want to use, recession, stagflation, but meaning demand destruction, lower margins and lower, prices are going lower. All right, any questions? FTLT, can you see my screen and hear me? Can you type in the stream chat if you can see me and hear me? FTLT. Yes, all right. Thank you, FTLT. Perfect. Michael, let me know if you were able to connect. All right. Go to webinar. Let's see. Any question? That's here. Slide bottom to 60, John. Fred, good morning. TradingView, the software is not expensive, no. So data, I mean, still not. You have to pay for data if you want real time. If you don't want real time, like delayed, like BATS data, it's delayed and that's free. But it's not expensive. External, only from that link. Michael, welcome. Okay, so it worked from go to webinar. Michael, welcome. I'm not sure why you can hear or see. Usually you would have to click on this link. I'll show you here. Let's see. So in the future, just click on this live stream. When you click on this live stream, you should be connected. I didn't see you here. So next time, just click on live stream and you'll be able to join live. All right. Welcome, Michael. Any questions? All right, let's review. So as Paul speaks, let's see where the market is. Let's look at the other asset classes. We had a broad-based rally yesterday. Materials are down, right? Materials are down 2%. Home builders actually holding on pretty well, but they're oversold. They're just retested recent lows. Metals and miners down 4%. Very interest rate sensitive sector. Emerging market is down. China is down. Germany is down. Industrial is down. Energy, one of the weakest sectors. That's kind of a new trade. Weaker dollar, that's positive for the market, right? I think it's the currency and the treasury market that's leading the equity market, not vice versa. So I would concentrate on the dollar and treasury. Strong price in TLT. TLT is actually important low, right? Again, going back to May low and trading above that level. So we do see kind of a treasury going back into this downward channel or trying to. Utilities turn positive, gold turn positive, REITs slightly positive, biotech slightly positive, healthcare slightly positive. Consumer discretionary is outperforming and technology is outperforming. And value stocks, again, the bear argument, one of the bear argument is the value stocks where everybody was hiding because the theme was, well, where do you hide? High-paying dividend stocks, Coca-Cola, Procter & Gamble, I don't know, Goldman Sachs. Now they're down 16%, but they're not down 35% like technology, right? So the next pressure in the market is going to come from these energy names, consumer staple names, So this is why it's important to have that rule and pre-market routine where you want to make sure you are diversified, right? You are in terms of concentration, right? So avoid concentration, right? Before you would think that Procter & Gamble and Bank of America doesn't trade the same way. Well, in the bear market they do, right? There could be divergences. It could last a couple of weeks. It could last a couple of months, but ultimately you own in the same stock, right? In the bear market, in the traders market, right? Maybe in the bull market you're not, but in the bear market the rules are a little bit different. Avoid cold trading, right? Hungry, angry, lonely, tired. Avoid revenge trading. Be aware of the earnings date, right? FedEx is announcing earnings. We're going to do some earnings strategy trades shortly. Try not to call the bottom. Try not to call the top. Try to look for signs of bottoming process, right? Yesterday's rally was a sign that the bottoming process short-term has started, right? But that doesn't mean that we've set even a bottom, right? That means that the bottoming process has started, and this is something you need to keep an eye on. Be flexible, right? Short-term, I'm bullish, but if Fed says something hawkish, if Powell says that inflation is out of control, we need to increase the asset repurchase program, from, I don't know, 50 billion a month to 200 billion a month, that will spark volatility. And then, you just have to get more flexible, right? Last week was a perfect example where Bank of Sweden raised interest rates by 50 basis points, right? They haven't done that in the past, I don't know how many years, 10, 20 years. Negative surprise, right? Higher inflation in Europe than expected. Yield in Italy is the spread between German yields and Italian yields are going parabolic. Emergency meeting in ECB. Okay, this is new information. Market makes marginal lows. And then you have to decide whether the narrative is changing or not. Review position beta, right? Look at how much the correlation to the market. Very important concept, and just see notice how often, very important emotional intelligence, look at your own behavior. How often do you look at your account value? If you look at your account value every 5 minutes, maybe something is not right? Maybe you probably have too many positions, probably too much exposure to the market. So I would look at the position beta. I do that. That kind of makes me understand the dynamics. And you basically look at, let's say, the QQQ is 30 day. Let's see. Spiders, right? Spiders is down, let's say 1% right now, close to 1%. what is your portfolio? Or when spiders was down, on the session low was down 2%, right? So when spiders down 2%, what was your portfolio, up or down? If your portfolio was down 4%, that means your portfolio moves 2 times correlation to the spiders. So if spiders is down 10%, you're going to be down 20%. I mean, if you have out of the money options, maybe that correlation will change. Then you can look at the portfolio beta. But nonetheless, that's the important concept. Pat, how important is how strong, right? The question is how strong. Again, the strength of support and resistance is defined by duration, right? And how much time does this, we have spent at 380. 380, last time we reached 380 was a year ago, right? March 26, more than a year ago, right? So it's a very long time. And more importantly is the simple Fibonacci retracements, right? A lot of technicians look at this. It's not just Vlad and Joe, retail investor, institutional investors. They're writing, 10-page papers on this research, and it's kind of it might look funny, right? What's Fibonacci retracement? It was discovered 600 years ago. Why do people care? Well, they do, right? It's kind of a herd effect. If everybody looks at Fibonacci retracements, then it's kind of a self-fulfilled prophecy. So 380 was 62% retracement, right? We've seen a lot of stocks like Google, it has reached 50% retracement, right? Microsoft has reached 50% retracement, and it stopped cold, right? No, not cold, but spent a few weeks trying to defend this level. How's Google actually doing? Okay, Google's outperforming Microsoft. That's been the theme. John is always right. All right, good. But not, okay, what was I talking about? Right, so these numbers are important, right? Because this is not something that happened 2 days ago, right? Distance versus velocity, right? Going back to the change of distance over, I'm not changing that, that's wrong. Distance over time, right? Distance over time. This is calculus. We don't want to talk about calculus. This is basic physics, right? So how much distance has been traveled over what time, right? So the time here is very important, right? This is the last recession low, right? Pandemic low, 212, and this is pandemic high, 479. So 50% retracement basically saying, well, this is just a temporary pullback and bulls are still in control. So that level is extremely important. It's a long-term, medium-term, short-term key support, right? Amazon is trading below 50% retracement. It's very bearish, right? Bears are in control. As long as Amazon is trading below 134, you can just expect lower highs and lower lows, right? Probably will reach at least pandemic low, right? Another 30% down in Amazon in the next, 6 to 12 months. So these retracements levels are extremely important. So spiders have, the bulls have to get above 380 level, right? We were at 378 yesterday, 376 yesterday. We need to get above 370, well, 377, I think 380 is this level, and stay above that level at least for a couple of days. What is the next resistance level? Next resistance level is high, right? We can clearly see that the current pattern is lower highs, right? This was the high, 52-week high. Then the new high was 460. Then the new high was 420. You can see change of distance versus time, right? Change of distance. Sorry. Oh yeah, change of distance over time, right? Acceleration or change of velocity. So the time, or change in time, right? So you can see over the same time, the distance is increasing, right? We dropped 20 points, maybe in a couple months. Now we dropped 40 points. In a couple months, now we dropped, I would assume at least 20 points. So probably next overhead resistance is 400, right? That would be 50% retracement from 380 to 420. I think that's the key overhead resistance. So somewhere 400, best case scenario, maybe we'll reach 420 again. We haven't done that for a while. So I would say somewhere between 400 and 420 is where the seller is going to step in. All right. Any questions? Meanwhile, technology turning positive, right? As Fed speaks, based on his tone, based on how much he smiles, and based on the rhetoric, everybody's parsing his sentences. I'm kind of here talking to you guys, but we're above 280. That's a win, or 279, right? We're above this level on QQQ. I think QQQ is actually more important than spiders right now, because spiders are being affected by materials and energy and banks, where technology is not. Right? How's interest rate? Where's the interest rate? Interest rate is actually continue to trade lower. Okay. Any other questions? Michael, any questions? I know you're new. We have a lot of people on Discord and GoToWebinar, so that's good. That's positive news. All right, so, well, this is all nice and wonderful. Let's talk about the trades and see if we want to make any adjustments. So short term, I think market is oversold. You can actually see today's is a good price action, right? Strong pullback, reversal. Obviously, Powell is going to continue. His speech is going to be a few hours. Market is going to fluctuate between up and down. If you guys see any news or hear any news that can drive the market from his speech, just type him in the questions. I do, maybe he says something fundamental. So FCX is breaking down. I do have a spread. I actually have 35 call. So it is overshooting on the downside. That's negative, right? Copper prices are dropping. It is approaching this key resistance, right? 52-week low. Still bullish. I think the main reason is the strong moves in yield and the dollar, but weaker dollar should benefit copper. I think copper is a proxy for economy, right? If the sentiment is changing from inflation to recession, then copper is probably, along with energy, going to be the main targets for bears. So for now, I'm still bullish. Just like energy, I think it's extremely oversold, but I would use any rallies to exit the position. Maybe today is a little bit too late, but I'm still in the FCX call. I had a spread. I did close the 40 call, so now I do have well-defined risk, right? $245. But I do have September contracts, right? This is where it's important. If you have July contracts or if you have August contracts, it might not be enough time for FCX to rebound, right? But if you have September, it's a clearly defined ABC pattern, right? We're trading in ABC, and we just need to figure out where's the end of the C pattern, right? We're heading into the main resistance. Maybe 30 level is where that low is, but you can clearly see we're probably in the final stages of this pullback. So for now, I'm holding. No changes to the FCX position. IWM. Both long and short, right? We did break through the 50% retracement. We briefly traded below the pre-pandemic high, or October 2018, September highs, right? Very important support. Talking about distance versus time, we're talking about 2018, so 4 years support. Russell 2000 held this level, at least for now, holding to this level for now. I'm long and short on IWM at the same time. So I did close the spread, right? This is where, if you do see stocks reaching key support and resistance levels, potentially you can break the leg of the spread, right? Spreads allows you to be bullish and bearish. So now I have 180 call, right? I closed one of the 190 calls, the short 90 call, and I'm hoping that this rally has at least a few more weeks. And if that's the case, then I'll make money on 180 call and 190 call. But at the same time, I do have a 160 and 150 put spread, right? Either I'm wrong short term, or I'm right long term that the sell-off will continue. Going into September, October, right? Going into the midterm election, the bears will step up again. So I did add 160, 150 put spread, right? This idea of being long and short the market at the same time. Kevin, thank you. Fred, thank you on QQQ. Fred, appreciate your comments. Questions just started. Warren Buffett doesn't like him. Nobody likes Fed right now. But interesting observation, a lot of people are, and I'm in that camp too. A lot of, if you want to talk about the bottom, there are two events have to happen. One is the VIX has to jump above 40. The other one, Powell have to say that based on the inflation data, we are seeing the signs that inflation data is subsiding, right? Those two events will probably be where the market is gonna start reaching close to the bottom, right? As soon as Powell says that based on CPI and PPI data, I think where inflation is turning around, right? And we have this capitulation. So I think that's where we're going to start talking about where the bottom is, right? Right now we're just talking about where a bottom is. Actually had a hard time using articles, still do, the and I mean, I kind of know when to use them, but always had a trouble. So now when you actually listen on the news and people say, are you talking about the bottom? Are you talking about a bottom? Very important concept, right, in English language. When English is a second language, that doesn't come naturally to you. But anyway, so that's an interesting observation. All right, so IWM, no changes. I'm kind of waiting. I mean, I'm realizing this is a strong support. I mean, there is a good chance it can rebound back to at least 190 level, right? That's this 190 or 180 level. So holding on to IWM. QQQ, right? We talked about QQQ. It's actually turning positive. Again, this 280 level is holding. It's important for the bulls to hold on to the 180 level. Right, 279. That was the low from last week we talked about. So we'll see where we're going to close today. But if we close above this level, or even if we close above 283, that would be a huge win for the bulls. If we close below that level, then that's a win for the bears. So that's QQQ. I do have, again, if you're comfortable trading stocks, you can invest into stock, right? I've been buying from 300, 300, 285. Again, using dollar cost average. Also have or you can trade using credit put spread, right? 280 to 60 put spread, right? Either or. Right? One way to hedge your position is SH, right? I mean, trading on SH, you can be long the spiders, and you can also buy inverse ETF. And one way to hedge is SH, right? And SH is trading inversely correlated to the market. So we talk about spiders. Some long spiders, also long as H as a hedge. And then finally, I do have XLK position. Right? I have an XLK position, 140, 150 spread. Option premium service. So if you're not comfortable trading, if you want another option idea, 140, 150 call spread. And XLK and then XOP. So I added to XOP. I think energy is oversold, so I added to 145, 150 call spread on XOP. And XOP is trading at 127, right? So it needs to get back to this 140, 150 level. All right, any questions on Discord or go to webinar. All right, Michael T, you're back. That's awesome. You're able to connect. Very nice. Thank you, Michael. All right, we have a record number of attendees in Discord. I like that. All right. Does the speed of fall in the stock changes the resistance strength on the bounce back? Well, it's kind of going back to physics, right? Usually it does, right? When you have this sharp pullback, right, you have three gaps, very bearish pattern. If the level holds, you do have a sharp rebound, right? So the faster the more energy you apply on the downward, the more energy you apply to the top, right? I think right now market is being holding back by the Powell speech, but assuming that the speech will end on a more either neutral tone or more dovish tone, then again, you're going to have this 3-4% rally, right? But in terms of physics, yes, force is it's mass times acceleration, right? That's your force. So obviously acceleration is the distance versus time. So in a shorter period of time, right? In a shorter period of time, right? Physics is important, right? It's important for trading. Please don't have an intuition about, about this, but the change of time, right? So the smaller the change of time, the more distance you travel in a shorter period of time, the greater the acceleration, right? The mass might be the same, but the greater the acceleration, so your force is getting much bigger, right? So and that usually could be a signal of some kind of capitulation. So on the way back, when it hits the wall, assuming this is the wall and rebounds back, then it's the same. It's the same analogy. That's why bear market, I usually have violent sell-offs and violent rallies, right? Because the changes in market price over time changes, right? Right. Or you can do, what is it? Voltage equals IR, right? So current times the resistance, right? What is the current is, how much electrons you can push through the wires, right? So the bigger the I, the more molecules are traveling through the same space, I changes, right? And then voltage increases, right? Assuming same resistance in the market. So the more you can push per second, then the higher the voltage or higher the force. Physics. So, I mean, it was actually an interesting book. I've been quoting, what was it? What was that book? He was talking about this concept. So this was a good book. I think I referenced before. Almanac of Naval Ravikant. He's a self-starter, immigrant from India, took multiple companies public, invested in multiple public companies. So he wrote a book, and his main point is that you have to read, right? And you should read anything. Doesn't matter what you read, you should just continue reading. And he had a big section in the book talking about physics and how, he always reads physics book, even though that's not his, he's not an engineer, but because, physics or math is an important part of life, right? You might not be an engineer, but, you see it in your life every day. So, I try to do homework with my daughters, who's, freshman in college and, senior or junior, and she's junior? No, junior. She's junior in high school. Do the basic physics class just to refresh my memory of all these formulas, and and I think it's important. So good question, Pat. Thank you. spend a little bit more time. FCX is up, AI is down, right? You're gonna have divergences, right? FCX has definitely had a strong momentum, but because of the change in price, in such a strong move, this yield reversal is kind of changing the dynamics, right? So this is also important to understand, right? Today is a perfect example, right? FCX, it shows a downward, but before it was positive. And right now, let's see QQQ. Right, well, QQ is right. QQQ, the model shows QQ is positive, but the QQ was down 2% pre-market, right? Let's see, what does it show on spiders? See, spiders, it still shows negative because QQQ is outperforming the spiders, right? So the model shows you that QQQ is outperforming the spiders basically by a day, right? QQQ turned positive before while spiders was negative, right, on Friday, right? Friday we closed QQ positive. So model sees that, but it needs 2 to 3 days to adjust, right? So when you have events like Powell speaking, right, on QQQ, on spiders it was right, but on QQ it was wrong, right? It shows strong positive uptrend, 275 support, 293, and the low was 276. Well, actually doing a pretty good job finding the low, but nonetheless. So it's doing a good job finding support and resistance levels, but it needs time to adjust to Powell speaking, right? And you can see as Powell speaks, copper is just, falling through the roof. Most likely is because the yield broke through this main support level, right? And it's driving this new narrative that we are basically going, that end of this year, end of next year, there will be a recession, right? So this is a new narrative, and the bears are targeting 2 places, right? Commodities across copper and oil, right? Proxy for the health of the economy, and it's a very quick drop, right? Again, time versus distance. In 1 week, 22% drop, right? It hasn't happened. Last time it happened a long time ago, right? Probably last summer. I think we had similar moves in energy, right? So that's, you always have to understand limitations of the model. And then the model is adaptive, right? It learns. And it learns on behavior in the market. And when behavior in the market changes, it needs at least a couple days to adjust, right? Any model, it's not tradespoon model, any model, learning model, artificial intelligence, it needs to learn. And that's why the slide, I always say 2 to 3 days to change the trend, right? 1 day doesn't set the trend, 2 days doesn't set the trend. If you have 3 days copper dropping, okay, now it's strong downward momentum. Oil down 6%, right? So copper, oil is dropping, and which is very interesting, right? What happened to the inflation? Everybody was talking about the inflation. Oil actually didn't drop 6%, but big drop in oil, right, from 124 to 110, right, 14% or close to 14% drop. It's because the narrative is changing. Even though everybody's flying and everybody's traveling, my wife was. I met her in the airport. I waited 2 hours for her to exit the plane. 2 hours, here because it's just. It's just crazy what's going on in airlines, but oil is dropping. So there's disconnect between the main street and the market. Not that there's disconnect, there's a time gap. It's the time gap. Fred Powell says U.S. economy very strong and can handle higher rates. Okay, thank you, Powell, for that. Thank you, Google. And I would keep Google is now a good barometer for the market, right? It's been outperforming. Let's see, is it outperforming the rest of them guys? So mega cap technology, right? These trillion-dollar companies, what push the market to the downside, they're kind of the pillars. So Google is actually not outperformed, but Amazon and Tesla is, right? So these Apple, I keep an eye on Apple, Google, Microsoft, Amazon, and Tesla. These trillion-dollar companies is what pushing the market high. And the fact that the Apple is close to yesterday's high, Google is close to yesterday's high, Microsoft is actually making new highs, and Amazon is making new highs, this has potential to push the market higher. All right, thank you, Fred. Discord channel details. Yes, Discord channel details. 1 second. All right, so if you guys, Michael T, let's see. I have to get used to it. It's a new interface. I'm using desktop now version. Invite people. Copy. All right, all right, so I pasted Discord link, right? Every Monday, Wednesday, Thursday, we have live session. Don't trade along, right? You might agree with my opinion, you might disagree with my opinion, but hopefully it gives you enough context where you can make informative decisions, right? The more formative decisions, you know, a lot of you guys are on this broadcast. We traded in 2018 together, 2012, 2015, you know, 2020. You know, you want to trade along with people who lived through at least a couple of recessions, right? Or couple bear market where market was down 20, 25%. If you haven't done that, then you don't want to trade along. You know, obviously Discord and go to webinars where you want to. Yes, Ohm's law. Thank you, Yuri. Is resistance weaker? I don't think resistance is weaker, but the current, right? The current kind of reverses, right? I mean, in physics, maybe current cannot reverse, but the resistance is changing if Powell is getting more hawkish, right? If Powell is going to keep reiterating, listen, guys, don't worry about it. You know, economy is on strong footing. You know, unemployment is, you know, historically low. We still have, you know, high single digit or low double digit growth in Fortune 500 companies. As long as that's narrative coming out from the Powell, then market can continue rally, right? So that's where this resistance is changing, right? When the market is oversold and he makes overbought and he makes a hawkish statement, you know, that resistance increases. And then when the market is oversold and he puts a more neutral tone, then resistance decreases, right? So I mean, you can make that analogy. Yeah. Take a look at the friction on inclined plane physics. Thank you, Fred. Does the model needs to adjust to EBV? Chart looks EBV. Let's look at EBV. Yeah, so this is a very strong recovery, right? You had this classical sell-off, you had a bottoming process, and day 1, day 2, day 3, it's definitely bulls are in control. And I assume, does it still say bearish, Abby? Yeah, it's still bearish. So this is a perfect example where it does need 2 to 3 days. The problem is that the model ran only yesterday, right? And it only had 1 day where it broke out of this support. So 1 day is not enough to set the trend. I would most likely, I mean, again, I can't predict exactly what the model will say, but if I have to guess, today, when the model runs at 6 p.m., right, the model runs only once a day at 8 p.m. Central. When it runs, this vector will change. The vector will change to positive, just like in QQQ, right? In QQQ, it already turned positive, where in spiders, it's still turning negative. And notice the magnitude of the moves, right? Going back to the physics. The model basically is detecting the change of distance over the change of time, right? It looks at change of velocity, right? And it clearly sees that the change of velocity is increasing, right? The acceleration is increasing. So it shows, while spiders is down 8% and QQQ is up 8%. The most logical question that a lot of people ask is, Vlad, this doesn't make any sense. It can't be QQQ up 10% and spiders down 10%. It will never happen. And the reason is because it's learning, right? And the reason is the QQQ was up on Friday, right? It was up on Friday, where spiders was down on Friday, right? Or neutral. And it sees that kind of this lag between two systems. Bill, what would I do? Right now I'm waiting, right? Again, so the question is, what should we do on FCX, or what should I do on FCX? It's oversold, right? I did close the short call. It is breaking down, right? It's reaching the support level. I think the copper, right? This is ABC pattern, right? Kind of a classical ABC pattern. So you can deep drop from 52 to 33, 50% retracement, and pullback, right? The question where? So in terms of risk versus return, I think there's limited room to the downside and probably much bigger room to the upside, right? I think copper will follow QQQ, right? I think QQQ is going to lead the market. So I think I have a limited amount of risk, and I think it will rebound back to at least 38.40. So I did close the short call. I have a long call. I know what my downside is. I do have a small stock position. I think this level will hold. It's just a question, where does this ABC pattern ends? Right? It could end today, could end tomorrow. There's no signs of bottoming process yet. So we need at least a couple of days of stabilization. And again, this divergence also not going to last. It's impossible for QQQ to be up, 70 basis points, and copper being down 7%, right? Either technology is going to break down tomorrow, or the copper will follow the technology. Not tomorrow, soon, right? Next few sessions. Based on the current price action, it looks like, at least for now, we are at session, yesterday's session high, which is above 279. So if we can spend day one, day two above 270 level, 79 level, then more likely than not, this level will hold. Should we hedge FCX or X? So my XOP position, I am kind of hedged, right? It's a spread. So I have 150, 145 spread. So I know what my total risk is. Buying XOP puts, maybe. But the point is that, it's a little bit too late, right? We are heading into extreme support levels. If you want to do some kind of a ratio spread, right? If you own 200 shares and you want to do one contract, maybe. I think it's just too late, right? It's kind of too late, right? I was surprised, but I talked about energy collapsing, right? But I was off, right? I thought, in April I said energy is overbought, don't chase energy. So my narrative hasn't changed, but timing is very difficult, right? And since it happened so quickly, it almost I thought this level is actually holding, didn't. At this point, I think it's too late, right? It's too late to hedge. So you have well-defined risk, you know what it is. Hopefully you structured your trade that it's less than 2.5% of your account value. And at this point, I would hold. If it breaks below this level, and you are down more than 2.5%, I would consider exiting this position, right? Because you don't know where the bottom is. At least for now, we have to trade above 135 to talk about the bottom, but, at this point, what you're, you have, I would, if it drops below 122 and you are down more than 2.5%, I would not break my own rule, and I would exit the position without, adding or subtracting. Going into the Thank you, John. I think FCX is close to the bottom, right? No, because of short term, I'm bullish on the market. You can be bullish on the market short term, and FCX continue to drop. The only reason it dropped is because just too many people were hiding in materials and commodities, right? That was the trade-off this year. Too many people were hiding this, too many allocations, and now you have margin calls, and it's a mess. But my opinion, we're close to the bottom. We can't talk about the bottom because we need at least 2 days of higher highs, higher lows. In energy, we kind of had that reversal yesterday. It obviously dropped again. You need at least 2 to 3 days of higher highs, higher lows, but it starts resembling the stabilization process. We still need to figure out, right now, again, this divergence. QQQ is up 1% and yield is down 4%. So that's, we're going back to this, at least short term, where, lower yield is good for technology stocks. All right, it's 9:25. Sorry, it took a little bit longer. Obviously, it's an important session. There's two types of traders, right? There is a tactical short-term traders that are trying to squeeze this rally maybe to 400 level, right? If you're a tactical short-term trader, if you always follow the rules, 4 trades, no more than 2.5%, you're never down more than 10% because you're aggressive short-term trader, then you might be long 3 position and 1 short position and try to push this rally to 400 level. If you don't have pre-market routine, you don't keep a journal, if you only have mental stops, and you often change trades to investments, my proposal is to sell into the rallies. It reaches 390, you sell some of your longs. It reaches 400, you sell more. It reaches 420, you sell more. You just keep selling into the rallies, right? Because I don't think we're not close to the bottom, right, in the market, especially with this narrative change, and there's more volatility ahead of us. All right, thank you very much. Have a great day. Thank you very much, Discord users. We have a record attendance day. FTLT, thank you for your email. Much appreciated. Seems like it's working. And I hope to see you guys on Discord, on GoToWebinar. Thank you very much and have a great day.